Hello and welcome to my channel, where I share tips and tricks on how to improve your personal finance and achieve your financial goals. In today's video, I'm going to show you how to manage your money using a simple and effective budgeting method called the 50 by 30 by 20 rule. This rule will help you allocate your income into three main categories: needs, wants, and savings. By following this rule, you will be able to cover your essential expenses, enjoy your life, and save for the future. But before we get into the details of the 50 by 30 by 20 rule, I want to ask you a question. Do you know where your money is going every month? If you're like most people, you probably have a vague idea of how much you earn and how much you spend. But you don't have a clear picture of how you're using your money. You might be overspending on things that are not important to you, or undersaving for things that are. You might be living paycheck to paycheck, or accumulating debt that you can't pay off. You might be missing out on opportunities to invest your money and grow your wealth. That's why having a budget is so important. A budget is a plan that helps you track your income and expenses and make smart decisions with your money. A budget can help you achieve your short-term and long-term financial goals, such as paying off debt, buying a house, starting a business, or retiring early. A budget can also help you reduce stress and anxiety about money and increase your happiness and satisfaction with life. But not all budgets are created equal. Some budgets are too complicated and time-consuming to follow. Some budgets are too restrictive and unrealistic to stick to. Some budgets are too vague and flexible to make a difference. That's why I recommend the 50 by 30 by 20 rule as a simple and effective budgeting method that anyone can use. The 50 by 30 by 20 rule was popularized by Elizabeth Warren and her daughter Amelia Warren Chiagi in their book, All Your Worth: The Ultimate Lifetime Money Plan 1. The rule is based on the idea that you should divide your after-tax income into three categories of spending: 50% on needs, 30% on wants, and 20% on savings. By following this rule, you will be able to balance your spending between necessities and pleasures, while also saving for emergencies and retirement. Let me explain each category in more detail. The first category is needs. Needs are the expenses that you must pay every month to survive and function. These include things like rent or mortgage, utilities, groceries, insurance, transportation, minimum debt payments, and basic health care. These are the things that you can't live without or avoid paying. According to the 50 by 30 by 20 rule, you should spend no more than 50% of your after-tax income on needs. This means that if you earn $4,000 per month after taxes, you should spend no more than $2,000 on needs. If you spend more than that, you will have less money left for wants and savings, which can affect your quality of life and financial security. The second category is wants. Wants are the expenses that you choose to spend money on for fun and enjoyment. These include things like eating out, shopping, entertainment, hobbies, travel, gym memberships, cable TV subscriptions, gifts, and donations. These are the things that you can live without or cut back on if needed. According to the 50 by 30 by 20 rule, you should spend no more than 30% of your after-tax income on wants. This means that if you earn $4,000 per month after taxes, you should spend no more than $1,200 on wants. If you spend less than that, you will have more money left for savings or paying off debt faster. If you spend more than that, you will have less money left for needs and savings, which can affect your financial stability and future goals. The third category is savings. Savings are the money that you set aside for your financial goals and emergencies. These include things like building an emergency fund, paying off debt faster, saving for a down payment, investing for retirement, or saving for education. These are the things that will help you secure your financial future and achieve your dreams. According to the 50 by 30 by 20 rule, you should save at least 20% of your after-tax income for savings. This means that if you earn $4,000 per month after taxes, you should save at least $800 for savings. If you save more than that, you will be able to reach your goals faster and have more financial freedom. If you save less than that, you will be at risk of not having enough money for unexpected expenses or retirement. Now that you know the three categories of the 50 by 30/20 rule, let me show you how to apply it to your own situation. The first step is to calculate your monthly after-tax income. This is the amount of money that you take home after taxes and other deductions are taken out of your paycheck. You can find this number on your pay stub or bank statement. For example, let's say that you earn $5,000 per month before taxes, and you pay $1,000 in taxes and other deductions. Your monthly after-tax income is $5,000 minus $1,000, which is $4,000. The second step is to track your monthly expenses. This is the amount of money that you spend every month on needs, wants, and savings. You can track your expenses by using an app, a spreadsheet, or a notebook. You can also use your bank statements, credit card statements, or receipts to record your spending. For example, let's say that you spend $2,500 per month on needs, $1,000 per month on wants, and $500 per month on savings. Your monthly expenses are $2,500 plus $1,000 plus $500, which is $4,000. The third step is to compare your income and expenses and adjust your spending accordingly. This is where you use the 50 by 30 by 20 rule to see if you are spending within your limits, and if not, how to fix it. For example, let's say that your monthly after-tax income is $4,000 and your monthly expenses are $4,000. You are spending exactly what you earn, which means that you are not saving enough for the future. To follow the 50 by 30 by 20 rule, you should spend no more than $2,000 on needs, no more than $1,200 on wants, and at least $800 on savings. This means that you need to reduce your spending by $800 per month, or 20% of your income. You can do this by cutting back on some of your wants, such as eating out less often, canceling some of your subscriptions, or shopping for cheaper alternatives. You can also do this by increasing your income by $800 per month, or 20% of your income. You can do this by asking for a raise, getting a side hustle, or selling some of your stuff. By doing either or both of these things, you will be able to save more money for your goals and emergencies. The fourth and final step is to review and update your budget regularly. This is where you monitor your progress and make changes as needed. You should review your budget at least once a month, or whenever there is a significant change in your income or expenses. For example, let's say that you get a bonus of $1,000 at work. You should update your budget to reflect this extra income and decide how to use it wisely. You can use the 50 by 30 by 20 rule as a guide and allocate 50% of the bonus, $500 to needs, 30%, $300 to wants, and 20%, $200 to savings. Or you can use the bonus to boost your savings or pay off debt faster, depending on your priorities and goals. By reviewing and updating your budget regularly, you will be able to stay on track and adjust to changing circumstances. And that's how you manage your money using the 50 by 30 by 20 rule. It's a simple and effective budgeting method that anyone can use to balance their spending between needs, wants, and savings and achieve their financial goals.